Hi everyone, it's Jack back on another video. Today I'm going to be talking about Etsy, yet another stock that's been really beaten down far more than it should have been in my opinion. It's a decent amount off its 52-week low of $67, now at $84, but it's still down nearly 60% year to date, down even more from its 52-week highs of $307. It's about 70% down or something like that. It's currently trading with a market cap of around $11 billion, far below what it used to be. I want to see if this is an investable company at these prices, go through my analysis, whether I think it's a buy, sell or hold, and actually do a DCF for this company as well. Etsy's most recent quarter was not particularly pretty viewing. They met their own personal guidelines on gross merchandise sales and revenue, with decent EBITDA margins slightly reduced from the year before, but any reasonable investor would expect a lot more from this company. 3.5% year-over-year growth in gross merchandise sales, now $3.3 billion, and 5.2% year-over-year growth in revenue. Neither of these are impressive numbers, don't get me wrong, for a company that is expected to be a growth company. However, this is off exceptionally hard comparisons from Q1 2021, so I'm not going to ding it too much. Q1 2021 gross merchandise sales were up 132%. To even maintain that is pretty impressive. It's up 218% over the last, comparing it to 3 years ago. So again, some perspective needed here. These are incredibly tough comparisons for this company. They have a lot of revenue pulled forward, and they're managing it admirably to keep that revenue and gross merchandise sales up. And I'm impressed with that in itself. But overall, purely on the face of it, these numbers are not so impressive. Etsy experienced a massive surge in growth during 2020 and early 2021, primarily due to the pandemic. They had a lot of sales en masse, which was a huge proportion of their revenue for one time relative to the amount of products on the Etsy. But they seem to have managed to keep hold of a lot of this. Gross merchandise sales up over 130% in the last 2 years when comparing to 2020 numbers, buyers up over 80%, and sellers up over 100%. These are all impressive numbers. To the fact that they're keeping this growth going forward and keeping positive numbers growing is impressive in itself, in my opinion. Even with now 89 million active buyers, they're still nowhere near the global opportunity and the total addressable market, far from saturation. The majority of these active buyers are in the United States. Their all-time buyer penetration remains below 50% across their key markets, and the penetration size in the next 15 markets are about 80% lower than the top two. There is a ton of markets that are really just growing. It's mainly a US and UK story right now, and there's a lot of other economies that Etsy is in and is making strides towards, and I can see this being a major growth opportunity going forward as their international sales continue to increase. I mean, this is not even including Canada, for example. This is not one of the top two markets. This is a major economy, not that dissimilar from the US in terms of taste, style, and things like that. They could definitely see major growth here. A really important metric for Etsy is gross merchandise sales per active buyer. This is kind of analogous to average revenue per user for a social media company like Pinterest or Facebook. They need user growth and each user to be spending more. It grew 10% year over year and 37% over the last 3 years. This is really impressive. Every user are interacting with the platform more, they're spending more on average, and this is absolutely key to Etsy continuing to grow its sales. From a financials point of view, the balance sheet leaves a little to be desired. Cash to debt ratio of 0.41 is not overly impressive. You've got to remember, this is still a relatively early stage company, still in its growth mode, has around $1 billion in cash on the balance sheet, and about just shy of $2.5 billion in debt. And this is mainly from acquisitions. The acquisition of Depop, for example. These are acquisitions that I am fully behind and are absolutely necessary for the growth of this company and moving into further markets, and that is something that I firmly believe was a positive move and an appropriate use of debt. So I'm not overly concerned about this balance sheet. They have by far enough cash to continue their operations and the free cash flow positive, so I'm not seeing an overly big cause for concern here. They have great gross margins. I think this balance sheet will improve drastically over time. Their interest coverage is absolutely excellent. This debt is completely manageable. The current year's EBITDA can cover their interest 49 times over. No problems here. Ullman score of 3.4 indicates this company is safe from financial distress in the near term. Looking at the margins point of view, the return on equity and stuff like that, 71% gross margin, very strong. For this industry, even that's strong, but for any company that is very strong. Operating margin of 17%. I would like to see this increase a bit more. They have such a strong gross margin. I'd like to see them carry a bit more into operating and net margins. Net margin of 18.49, call it 18.5. Strong for the industry again. For e-commerce, this is a strong number. There's no getting around this. $18.5 for every dollar in revenue goes straight into the back pocket. This is an impressive number. Return on equity percentage of 71, absolutely outstanding. One of the highest numbers you'll see for this. Return on assets percentage of 13, not so important because this is a very asset-light business, but still pretty decent. Return on invested capital of 24%, very, very strong. Bit weak than it has been previously in Etsy's history, but this number tends to fluctuate. I'm still very impressed with this number. 24% is a strong number for any company, particularly one that is trading at this valuation. And speaking of valuation, current trailing PE ratio of 28, forward PE ratio expected of 33, pretty much the cheapest Etsy's ever been, aside from very recently when it was at $67. Over the longer term, the fact of like a 3-4 year period, these are some of the cheapest prices Etsy will have ever been seen at. A PEG ratio of 0.37. Expected growth here is obviously massively outweighing the price. 0.37 is firmly bargain territory in my opinion. Some other metrics don't particularly agree with that, but the analysts are clearly expecting a lot of earnings growth in the future, and this is not being priced in currently whatsoever. Under 1 I would consider a bargain. Price free cash flow is another metric I like to look at. Typically I like to play 120 for this. Price free cash flow 24 is a bit expensive, but again, very, very cheap for Etsy's historical numbers, and free cash flow is relatively depressed this year, down around 30% I think. Analyst estimates for this company look really, really strong. They're predicting revenue of $2.5 billion on a market cap of around $11 billion right now. Going forward, this is expected to increase to around $3.5 billion by December 2024. Future revenue growth rate of around 14%, which is not blowing the doors off by any means, but is pretty decent. It shows this company moving forward from its current growth rate of around 5%. Future earnings per share growth of 24% expected going forward. This shows the company turning towards more profitability, which I'm relatively happy with. Gross margin is good. They're already free cash flow positive. I'd like to see an increased focus on profitability, but I'd also like to see them increase revenue growth. You can't have it every way. So personally, I'd rather them focus on revenue growth right now while maintaining some profitability, but it looks like analysts are expecting them to turn a decent profitability tap on in the near future. Next up, and finally, the discounted cash flow analysis to work out a fair value for this company based off the sum of its future cash flows. Now, free cash flow is depressed 36% this year. I'm still going to use the trailing 12-month values of $3.58. Using this and a 14% growth rate, I chose to put this roughly in line with the revenue growth that analysts are expecting. I think this is the most realistic number. The 5-year average revenue growth rate is 41%, which I think is going to be tough to maintain given all the tailwinds they've had. And the free cash flow 5-year growth rate of 267% is just a bit over the top, isn't it? So I'm going to go with 14% growth rate for revenue, and I think free cash flow can grow roughly in line with this. Using this, a 4% terminal stage growth rate and a 9% discount rate for the long-term returns to the stock market, this gives a fair value of just shy of $90. Reasonable margin of safety versus the present day stock price around 85. I would consider this effectively fair value. Now, of course, 14% free cash flow is a relatively optimistic estimate. It's definitely not conservative. If you think this is conservatively growing at 8%, 7, 8, 9% free cash flow growth a year, then this is not a fairly valued stock right now, and it's probably a fair value to pay for this would probably be around $60, something like that. Personally, I think this is a reasonable expectation for Etsy's future. I like where this company's going. I think they can do this over the next 10 years. I think this company has real potential to 5, 6, 7x over the next 10 years or so. At this valuation, I think this is a really nice price for this company. I have owned Etsy in the past and I sold over $250. So I was very happy with the company then. I just thought the valuation got a bit carried away. I think currently our FP are around 30. It's nowhere near the S&P 500 average, but I think the growth prospects for this company are way above the S&P 500 average. I can see growth accelerating in the future. I think it's got an excellent total addressable market, an excellent product that is really well received. I think it is making all the right moves to become a real powerhouse in its space, and it has managed to fight off competition from real big boys like Amazon and eBay successfully and carve out a niche for itself. But of course, this is just my opinion. You should make your own mind up whether you think it's a buy, sell, or hold. Don't just listen to me and tell me in the comments what you think, of course. I'm not a financial advisor. I'm just giving my 2 cents. You tell me if you think I'm right or wrong. Like and subscribe if you enjoy the videos. I'll see you again next time.